I'm Illinois Extension's Todd Gleason. This is the FarmDoc Daily Live Coronavirus and Ag webinar series today, the PPP of the CARES Act. Our special guests for the day will include Dale Lattz, Bob Rhea, and Nick Paulson. Nick, of course, is part of the FarmDoc team, and he's here to get us started for the day. Thank you, Nick, for being with us.
All right, thank you, Todd. So I'll take over here and just give a short overview, a brief introduction, and then let both Dale and Bob take it away from there. So if you want to go ahead and click on to the next slide there. So the topic for today's webinar is one of the programs that was included in the Coronavirus Aid, Relief, and Economic Security Act that was signed into law on March 27th. So this is phase 3 of the stimulus package to address the coronavirus pandemic that we're currently experiencing. The previous webinar, we had talked about some of the funds that were directed specifically towards USDA and agricultural programs, totaling about $49 or $50 billion across a variety of things. Today, we're joined by the FBFM folks to talk about the Paycheck Protection Program, which is a small business administration program with just under $350 billion allocated to that. Got some breaking news on this program this morning that we'll work into the webinar as well today. But with that, I'm going to let Dale Lattz and Bob Rhea from the Illinois FBFM Farm Business Farm Management Association take it away.
Thanks, Nick. This is Dale. Good afternoon, everyone. And Bob, I assume you're on now from Camp Point, Illinois?
I think I'm here. Can you hear me at all there, Dale? I hear you loud and clear.
Yes, we can hear you good. You gave us a little heartbeat there as we made connections right at the end. So yes, welcome everybody. We're Bob Rhea is interim CEO of FBFM and a field staff person located in Camp Point, Illinois, in the western part of the state. I'm in Mumford Hall here on campus, and we're going to spend the next half hour or so in talking about the SBA's new program, Paycheck Protection Program, and more specifically, kind of highlight some of the areas that we see where this might fit in agriculture. Going to kind of look at that more closely. So we're going to start and give a little bit of background about the protection program, eligibilities, loan amounts, things like that, and kind of update on some new rules and regulations that keep coming out and helping us decipher this program and work with our lenders and getting this taken care of. Bob, I guess we can kind of address maybe one of the things that just came out today and put that out up front in terms of funding availability. I don't think that'll diminish what we want to talk about today, assuming there'll be more funds down the road, but maybe just kind of update us where we're at on that $349 billion or whatever.
Sure, that seems like a big amount of dollars, but we learned this morning in an official announcement from the SBA on their website that those funds had been fully consumed. About 9:30 a.m. is when I looked at that and saw they posted that to the SBA site that they were no longer accepting applications as the appropriations had been fully consumed. I don't think anybody's surprised that the money has been fully used. Nobody knew exactly how long that would last. And on the very first day, April the 3rd, Treasury Secretary Mnuchin announced it would last till June the 6th. And I think 2 days later, he announced it would last till maybe someday in April. So clearly just one more piece that has not had real clear consensus about where we're going and how we're getting there. But the money has now expired. As well as the EIDL grants, that money was appropriated. That's expired as well.
Thanks, Bob. So we're assuming there'll hopefully be new funding down the road. So what we'll be talking about today will still be relevant if they do add funding to this program, which I think that would be the case. So we'll get into some of the details here. So background: SBA stands for Small Business Administration. Normally an agency that non-ag businesses work with. But this program, the PPP program, Paycheck Protection Program, a new program, was initiated to help small businesses keep employees on the payroll or bring back workers who have been laid off. This was part of the CARES package act that was passed and was rolled out here in early April. And a lot of news about this program, a lot going on with lenders across the country and getting this initiated. Program offers 100% SBA guaranteed loans, and that's important, 100% SBA guaranteed. It is a guarantee program. The local lending agencies are the ones providing the funding up front for this, but it is 100% guaranteed. Loan amounts up to 2.5 times the borrower's average monthly payroll cost with a $10 million maximum limit. We're going to talk in generalities here in a lot of parts of the program, but there are specifics as you get into this and get down in the weeds that does have more details. We don't have time to get into all those details, but just be aware of, like any loan program, there's a lot of T's to be crossed and I's to be dotted, do everything correctly. So that's kind of the start of the program there. Program started April 3rd for businesses with wages, April 10th for self-employed individuals and others. Program was set up to go through June 30th or until funds are all used up. And we modified that slide today, put that in red and bolded that as we found out today was the day that all funds are used up, or yesterday. So that's where we're at on that. A couple of the advantages of this program compared to typical SBA requirements, and you can see that there on the slide. There were no loan fees to the borrower, no requirements that the borrower needs to look elsewhere first for credit and get turned down first before we can come back to this. No collateral needed or no personal guarantees required. So a lot of those typical SBA requirements were waived in this program. Bob, anything to add on these first couple of slides here as we go through these?
Well, I think this is certainly a novel approach to stimulating the economy, which was really the design, was to add dollars to employers, and they even targeted rural areas as a featured part of this program. And so they made it as simple as they thought they could, at least as far as the application piece. But Dale, we know there's really two components to this. There's the loan computation portion, and there's also the forgiveness piece that we'll talk about too. And that piece is still alive and well and still demands borrowers and lenders and all of our attention.
That's correct. We've been kind of highlighting, and people have been emphasizing and looking at the application process. Do individual borrowers, are they eligible or not? What are the eligibility requirements? We're kind of working through that now. A lot of loans have been processed, obviously submitted and approved, and funds are getting out there to some of the earlier applicants. That's kind of the first large phase, as Bob mentioned. The second phase, another phase, well, 2 or 3 phases will be, first of all, using the funds for eligible expenses. And then also one of the other important parts of this program, very important parts, is the potential to actually have the principal and interest forgiven. So not only is it a loan, but there is the potential to have that loan forgiven, or a part of that loan forgiven, if you meet certain criteria and use the funds in certain for certain expenses in the business. Otherwise, funds that are not forgiven will be set up on a 2-year term at a 1% interest rate. Obviously, very attractive terms there from that standpoint if parts of the loans are not forgiven. On the application process, there are a number of certifications the borrower must attest to, and one of them, kind of a broad one there, is as indicated on the slide. Current economic uncertainty makes this loan request necessary to support the ongoing operations of the applicant. Kind of a broad statement there. Bob, how do you see this maybe fitting into the agricultural sector where farmers can meet this certification and be eligible under these conditions?
Well, certainly different than other SBA and even some other financial distress scenarios that required reductions in gross receipts, reductions in net income. You know, we've seen those over our careers of other requirements. This, as you mentioned, is a very broad stroke about economic uncertainty. We, as FBFM folks, we asked Gary Stickey to provide some information about that. And he quickly pointed out to, deep decline in crop prices. Also, if you're a livestock producer, I think your economic uncertainty has probably never been higher than it currently is. If you're in the livestock enterprises, our grain producers certainly have a decline in demand related to livestock, related to ethanol, which results in a decline in price. Where are we going? How can we work? How do we conduct ag operations and meet our preferred social distancing requirements? I think there's a lot of economic uncertainty today.
That's correct. And there was a lot of questions at the beginning and the rollout of this process were whether farms or agribusinesses were eligible for this program or not. I think that comes from the traditional fact most farmers or agribusinesses maybe do not work with the SBA or SBA programs, but the definition of this was kind of widened a little bit. There were certain facts and opinions and other statements that came out from both SBA, the American Bankers Association, and so forth, USDA, as we've got rolled out in this program that farmers are eligible for participating in this program. And we have seen farmers participate in this program at certain levels. So where do I go to apply? Again, this is a program administered through the lending institutions. So you'll be working with your local banker, local farm credit institution, or those lending institutions that are participating in the program. Not everyone does participate necessarily with SBA programs. You would just need to check with that. But a lot of banks are authorized SBA lenders, so they're set up to do this right away. Farm Credit was authorized in the act to participate if those associations desire to do so. And those regulated lenders that traditionally maybe have not done or participated in SBA programs can become authorized and approved to participate in this program. And so, again, you'll be working with your local financial institutions that are involved with this to actually submit the application and go through the lending process. Bob, I think we see most banks or many banks in the areas are involved with this, and those that maybe haven't done SBA loans because of the demand out there are getting involved in participating.
Yes, most community banks have been very actively participating in our region. Farm Credit Institution in our region, Compeer, has been actively participating. So we've had several institutions going in the program, and as you mentioned, several who are not actively engaged with other SBA activities have joined. So we've seen more involvement from lenders. Our lenders in our region have been very helpful, very much on top of the program here to get in the game.
So eligibility, we talked about where do you go, who's eligible, and we're just not gonna get into all the details here, but we've got a slide up there that generally lists most of the eligibility requirements for the businesses. I don't have all the last details on there, but generally small businesses with fewer than 500 employees. I'm going to skip down there as we get into some of those other definitions. An individual operates as a sole proprietor, which many farmers do. Individuals that operate as independent contractors. And then the next one down there, an individual is self-employed who regularly carries out any trade or business. Again, most farm operators operate as a sole proprietor and also are self-employed. Some have entities set up where they're employees of their corporation, but a lot of farm businesses are still run as self-employed individuals, and those are listed specifically in general as a type of business that does meet the eligibility criteria. Loan amounts, moving on here. Again, we talked about this a little bit earlier, 2.5 times the borrower's average monthly payroll cost, capped at $10 million. You can look at that and calculate those payroll costs based either on the previous 12 months, if I'm looking at that today, going back 12 months, or calendar year 2019. Obviously, payroll, taxes, and so forth are generally calculated on a calendar year, so gathering information and documentation to prove those wage figures probably will be easier on a calendar year basis if you were in business Just looking at your summary of wages and that paid in 2019. There are some additional rules that we won't get into the detail on that for seasonal businesses that pop up in the spring and summer and so forth that don't operate full bore on a calendar year basis. Do you have an example there just of how that works? If I had a business with an annual payroll of $120,000 in 2019, there are limits in terms of you not including wages over $100,000. In this example, if we didn't have anybody individually over that, you can just simply take the 120,000 divided by 12 months to get a monthly cost. Take that times 2.5. In that example there, you've got a situation of $25,000 would be the loan amount. Bob, in your activity that you've been doing these, what do you typically see as some of the loan amounts? Again, we got the math there and how it's done. What sizes do you see out there ranging typically for the businesses you're working with?
I think we've all learned a new factor. What's 1/12 times 250%? It's a 20.833%. That number has been touted a lot. So even for these self-employed folks, they're capped at revenue or earnings of $100,000. So their maximum loan without any other employees would be $20,833. As we get into the forgiveness piece, we'll see a couple of other unique percentages that we've been dealing with. We have the cap of payroll per employee. It's also the self-employed cap of $100,000. So, we're mostly talking about sole proprietors, self-employed people on their own, $20,000 maximum loan amount. When we get into some other livestock businesses that have several employees, those loans could be in the couple $100,000 range pretty quickly if they've got a payroll of $500,000 to $1 million. And then other businesses that we've dealt with, we've seen them as low as $4,000 loan amounts, but a lot of them are in the $20,000 to $30,000 range. So generally, not many employees in the ag sector that we deal with. So those loan amounts aren't as large as what the national statistics will be sharing with us.
So we talk about the loan amount being 2.5 of payroll costs. Here's some of the definitions that have been listed in the regulations and rules in terms of what are payroll costs. It seems like that would be pretty straightforward, but not necessarily. Again, for wage earners, you can see compensation to employees with basically your salary, wages, and so forth, commissions, other similar compensation. They do add some additional items in there as far as payment for vacation and so forth. We have group health care benefits. Those insurance premiums can be added to the cost of payroll, retirement benefits. And at the bottom there, when we talk about our self-employed farmer out there, for an independent contractor or sole proprietor, wages, commissions, income, or net earnings from self-employment income or similar compensation. So if we have the individual out there, farmer, that actually doesn't have any employees besides themselves, we look at their net earnings from self-employment, and we'll talk about that here a little more in the next slide or two, as being their definition of payroll.
I think that's one of the key differences between the two slides is if you have employees, you're going to use some fringe benefits as being included to boost your loan amount. For the self-employed person, you're not going to be able to use those same types of benefits.
That's correct. And we've just got additional information a couple days ago addressing some of the questions that we had in terms of how do you figure payroll for self-employed. We kind of assumed it might be the net Schedule C or the net Schedule F, and we had more documentation come out on that. As you can see on this slide, we're talking about payroll costs for self-employed. First of all, in the supplemental interim final rule that came out a couple days ago, the examples they listed there were you need to have filed a 2019 Form 1040 Schedule C, which is for non-farm businesses, or we'll be planning to file that. We're assuming the language kind of specifically talked about Schedule C. We're assuming one could kind of stick Schedule F in there as the same kind of a proxy for Schedule C, as we talk generally about self-employed individuals. If you have self-employed farmer out there with no employees, as we're talking about, you would use your net profit from your 2019 Form 1040 Schedule C or F for farmers. limited to $100,000. If no net profit of 0 or less, you actually wouldn't be eligible for the program if you do not have other employees. Self-employed with employees out there, which a lot of farmers do have, you would use your net profit from your 2019 Schedule F plus your gross wages of your other employees. Again, if you had a negative Schedule F, you would set that at 0 and just include your gross wages of your other employees. Bob, you want to kind of expand on any of that on that slide, as this is some new information that we received a couple days ago?
Well, everybody that's on this call, is if they've been following this, they know that information changes rapidly and in ways we've never seen as we try to connect the tax world and the lending world and the government world. We're usually finding out some different terms mean different things. We are, taking the position that we think Schedule C filers, which were noticed or were identified in the notice, that also applies to Schedule F filers. The law has been pretty clear as they describe self-employment income. Now, granted, the most recent guidance on April the 14th only describes Schedule C filers in those rules. And, maybe we're taking that a bit too far, but I'm comfortable with thinking we're interested in self-employment income all the way through this definition that starts in the statute. It would have been nice if the April 14th interim rule would have added a little flavor to that would give us a clearer picture. But I think that was both the intent of the initial legislation and the spirit of maintaining relief to self-employed operations. But granted, the latest set of rules only describe Schedule C operations.
So that's kind of the start of the eligibility, who's eligible, and how is my loan amount determined. We are getting a handful of questions that I think we'll cover in some of the next couple slides, and we'll address those at the end of the session here. So we've got a loan amount out there. We've determined we're eligible. We've processed it and received loan proceeds are in the bank account. Now what do I do? Well, so I do have limitations on how I can use those loan proceeds. The next slide kind of shows that eligible use of loan proceeds. Of course, again, one of the main thrusts of the program was to maintain or bring back employees of the business and keep them employed in this time of economic uncertainty and downturn we're in right now. So obviously, payroll cost of payroll are one of the main items that these loan proceeds can be used for. And really, we'd like to see at least 75% of those proceeds to be used for payroll costs. But the rules and regulations did list some other items that we can use these proceeds for. These all must be business-related expenses, not personal expenses, but those include mortgage interest obligations, rent and lease obligations, utility cost, and other interest payments on business debt obligations kind of incurred before February 15th. I think in all of these, as we talk about that, we see this February 15th date. I think the thrust there is that we want to use these proceeds for these specific items for these costs that were incurred before we hit into this economic situation we're in with the coronavirus, and not new obligations that occurred after that date. Bob, you want to touch on some of the other conditions that are listed on the slide?
I think the one that we've been struggling with earlier was the 75% for payroll cost. And that means, to your initial comment, that payroll needs to continue at essentially the same pace in 2020 as it did in 2019 if they're going to reach that 75% target for actual payroll reductions. Now, for the last bullet point, the Schedule C, and we think the Schedule F filer, these deductions are related to the 2019 form you used to make the application. So as long as you're having those deductions claimed in 2019, they'll be eligible uses in 2020. As one brief example, if you didn't have any mortgage interest in 2019, you wouldn't be able to use it for mortgage interest in 2020.
So again, we've laid out the process for getting a loan, how much loan you can get, and the eligible uses for the loan. The other important part of this program then is if I use it correctly, use the loan proceeds correctly, I have the possibility of actually getting the loan forgiven, up to all the loan principal and interest that may have accrued. And basically the same expenses that we've just listed as far as what are the eligible expenses to use the loan proceeds for are the same expenses that I need to document and use in an 8-week period, starting after the loan proceeds were dispersed, to use those for those specific expenses. And if I do that, I will be able to have the loan and the accrued interest forgiven, or up to a certain part if depending on how I use the expenses. The other critical part of this, again, is that to get the maximum forgiven, I need to use at least 75% of the loan proceeds for payroll costs. If I fall below that, I'm not going to be able to get 100% of that loan forgiven. So I need to use at least 75% for payroll, and then the other 25% or whatever that might be for the other items that we just talked about, in terms of mortgage interest, rent, utilities, and so forth. And again, these payments are made after, or the 8-week period after the loan proceeds are dispersed. Comments on that, Bob?
Well, and just a reminder, this is not for the self-employed person we're describing here. We're talking about people who would be S Corps, C Corps, or partnerships that have as their business operation, and they have other payroll going on as well. The self-employeds have a unique calculation that Dale will take us to next.
That's the next slide, and this information just came out a couple days ago, again in the supplemental interim final rule. That was one of the questions that we were really kicking around. How is a self-employed individual, and we're thinking about that 8-week period after loan proceeds were dispersed, how am I going to calculate payroll if I'm a self-employed individual without any other wages or very limited wages? And that we did receive clarity on that a couple days ago, and that's kind of listed here in this slide. We've got a new term called owner compensation replacement. Haven't really heard of that in those combination of words before, but this is kind of what we're talking about for the self-employed individual. So one of the eligible uses for PPP loans for those individuals with self-employment income is for owner compensation replacement. Well, what is that? It's based on your 2019 profit from your Schedule C or Schedule F. It's not really a cash expenditure during this 8-week period. This is looking back to last year's 2019 net figure, and there's a calculation of 850 seconds. Basically, that's 8 weeks of a 52-week year that I can use or calculate as far as part of that loan forgiveness process for payroll or wages, if you will, for the self-employed individual. It's kind of a new thinking there, Bob. Probably didn't explain that very well. We're just still getting our hands wrapped around that, but that addresses the question for those self-employed individuals without any payroll, especially how do I calculate my payroll cost? Do you want to expand on that?
Well, it's a very simple computation as you described. It has nothing to do with 2020 at all. And we thought one of the challenges for self-employed people would be, how do we calculate their net income in 2020 to give them forgiveness at this time of the year, and for our farm operations especially? Well, we don't need to worry about that anymore. We just look at their 2019 net income figure, and their forgiveness amount will be 8 weeks out of 52. If you do the math on that, that's 15.38%. The maximum loan they could get based on their income for the year would be 20.833%. And if you take the 15.38 divided by the 20.833 maximum loan, that gives you 73.8% of the loan amount can be treated as owner compensation replacement, and appears to me to be sort of an automatic forgiveness amount. 2020 results do not matter for this computation. It's only what happened in 2019, both to determine the loan amount and oddly enough to determine the forgiveness amount. And if you take that one more calculation, that 8 weeks out of 52, Dale, that's 15.38%. I thought it was interesting, coincidental, or maybe totally unrelated that the self-employment tax rate is 15.3%, almost exactly the same number. So there's got to be some connection there someplace. But certainly a simpler process for self-employed loan forgiveness than for any other entity loan forgiveness, and much simpler than we thought it might be 3 days ago, I guess.
That's correct, Bob. The last 2 weeks, we were raising a lot more questions than we were getting answers as we kind of kicked around this program and how some of these calculations would be done. But this was one thing that came out a couple days ago that I think clarified this and made it a lot easier than what we thought this might be. Well, we used our half hour up here, just a couple questions that we had listed here remaining, and then we'll go to some of the questions that we have received from the listeners out there. Eligibility of self-employment farmers. I think we seem to have seen this answered through a number of comments and FNQs out there that we do believe self-employed farmers are eligible even with no payroll. The calculation of payroll for self-employed individuals with little or no wages has been addressed in these recent guidelines that came out a couple days ago. Probably still some questions with self-employed individuals with multiple businesses, and we have a question out here. If I had a Schedule C and a Schedule F, we'll kind of tackle that a little bit, but probably not clarity on that necessarily. The detailed calculation of loan forgiveness process, documentation needed. Again, that's a step that we haven't gotten to now. We're getting into that right now. Lenders will be asking, I would imagine, for some pretty specific documentation. You've got the loan now, you've spent it on eligible expenses, hopefully. Now, how do I get the loan forgiveness? What kind of documentation am I going to need to provide to the lender that I've spent those funds on the appropriate areas, and then how much did I spend in the payroll area and things like that. So that's kind of the next phase we're moving into now as some of these loan proceeds have been dispersed. And then the calculation of payroll for self-employed individuals and for purposes of loan forgiveness. We just kind of touched on that last slide. Fortunately, received guidelines on that here a couple days ago to help address that area. Bob, any more general comments on this before we do get into some of our questions?
I think the general comment is it's a very unique program, rolled out very quickly, and has ongoing changes. So we need to stay tuned in to what the rules were on Monday, what the rules were on Wednesday, and what they might be next week, especially now giving the appropriations have been consumed. What is next for the participation level?
Ken, I do want to emphasize again, this program is administered through your local lenders. We do have feedback on some of the participation by lenders out there and some of the questions that were being raised about the eligibility of farmers or not, and what's included in payroll and what isn't. And again, the lenders are the ones that have to kind of administer this program and follow the rules and regulations. So that's the ones that really you kind of need to work with and see what their guidelines on this. Well, I'll get into some of the questions here, Bob, and we'll start on that right away.
Yeah, we've got a couple of things, Dale. Before we get to that, we'll remind folks that they can ask questions of you and Bob Ray if they'd like. They just need to go over into those gray boxes, find the questions section, and go ahead and type that in. In the mean space, we'd like to thank our sponsors of this particular webinar series. They include Compure Financial, FS Growmark, Farm Credit Illinois, the Illinois Corn Grower Association, TIA Center for Farmland Research right here on the Urbana-Champaign campus at the University of Illinois, and the College of Agricultural, Consumer, and Environmental Sciences, and the Department, of course, of Agricultural and Consumer Economics that Nick Paulson and the rest of the FarmDoc team belong to. Upcoming webinars, by the way, tomorrow morning at 11 o'clock, we'll get the 2020 crop planted, or at least we'll talk about that. Emerson Nafziger should be here for that, and we'll discuss what he thinks about the cold weather and conditions in the field and his expectations going forward. And then on Tuesday of next week at 11 o'clock, the impact of the coronavirus pandemic on food prices and the retail food sector. That should be really interesting, as of course we've been having a lot of conversations about the supply chain and the shutdown of many of those processing plants. Nick Paulson, I think you've probably been organizing along with Dale some of the questions that need to be answered. And again, if you are having a question, go ahead and write those into the box and we'll get them checked in with Nick and Bob Ray and Dale Lattz. Nick, what do you find?
Sure. Thanks, Todd. Maybe the first one I'll throw to Dale and Bob is one that we had actually discussed a little bit yesterday. Any information or answer on whether participation in this PPP program will have any kind of ties or effect on any other support farmers might see coming out of this stimulus package, MFP-like programs we might have in 2020, or any similar support that might come specifically for agriculture?
We've heard that comment from places. We're trying to trace down a source and validate that point. We even have people, even since 1 o'clock, communicating with Senator Grassley to see if there's any feel that he might have on that point. I don't see any connection yet. The legislation doesn't provide any connection there. None of the rules we've seen make that connection. The USDA website, in fact, says farmers are eligible and should be considering applying. There are connections about PPP and unemployment, that you really get one or the other. There are connections about PPP and some tax credits. You get one or the other. There's connections between PPP and EIDL. You get one or the other. Or I shouldn't say one or the other, but there are connections in how they blend together. So I thought if there would be some restriction, we would have seen something about that. I've not seen it. I've heard that comment, but I haven't seen anything in the law or these updating rulings that describe that.
All right, and then maybe to try to knock out a couple of related questions, given the fact that we did see the at least initial $349 billion in funds extinguished as of yesterday or this morning. Question on an individual who has utilized this program and already received their funding. Is there any reason to think that the bank or the lending institution would take those funds back, or if they have them now, or are they that was obviously processed and are set? And then related question, since the initial funding is gone, what would you be doing in terms of advising farmers who might have been in the process of applying or initiating that process moving forward?
Go ahead and start, Dale. If you need something else, I'll jump in.
Yeah, go ahead. Yeah, so those applications have been processed, submitted to SBA, and the funds received are in the bank. I don't see any reason to think that there's going to be any clawback on that at all. I mean, that's been processed, been accepted, the funds are there, and now you need to just kind of use those funds for the eligible expenses that we kind of outlined in the program here. As far as those that haven't submitted an application yet, are still interested, or the application's sitting on the lender's desk and the funds are gone, I think at this point in time, since this just came out yesterday that the funds are all used up, I think most, I would imagine many lenders with a thought that there'll be additional funding for this program would probably keep taking applications and just have them sitting on their desk until we know where we're going to be moving forward with in terms of if there is additional funding or not. So we're advising our field staff to keep educating farmers on the program if they're eligible and interested. Fill out the application, talk to the lender, and just kind of have it in the queue just in case there are additional funds available.
I'd add one piece to that, Dale. If the application was made and your loan amount under one set of rules, and now we have a different set of rules for the forgiveness piece, I would be cautious that I might not get the full amount of forgiveness that I anticipated 10 days ago. And I guess we're not sure how that might shake out, but I don't think you'll have to repay the money today. They'll take it back, but your total forgiveness amount might be diminished over your initial expectation.
Bob,
Speaking on, sorry, Dale, go ahead.
This Todd, I've got a question for Bob, based on your tax experience. Is there any reason, and I know this is not available at the moment, but is there any reason on the tax side that a farmer, a sole proprietor, might not want to apply based on the risk and benefits that you laid out earlier in terms of one program versus the tax loophole that they might be using on the other side?
Yes, there could be. If you had a self-employed farmer who in 2019 had no payroll and had a relatively low Schedule F net income, and let's say their loan computation turned out to be $1,000, of which they could get $743 of that forgiven without any other expenditures. They should also look at unemployment. If they've been unable to work, if they qualify under the unemployment rules, which is a whole different dynamic, but they potentially could get $600 a week for several weeks under the unemployment benefits. So I'm not sure that's totally applicable to many farmers. I think most farmers have been working, but for some Schedule C filers, unemployment could be a better choice than a PPP opportunity.
Yeah, up to 4 months, right? I can't remember, or is it something like that? It's a pretty lengthy time.
It's yes, 13, 16, 19 weeks. I forget that number, but something like that.
One thought on that.
Oh, go ahead, Dale.
I was just say one thought on that, Todd, that we didn't mention in the presentation in terms of the loan forgiveness. Typically, forgiveness of debt can be a taxable event. It was specifically stated in this law that the forgiveness, if there is loan proceeds forgiven because they meet the eligibility and use the right, use the loan proceeds for the right expenses, that this would not be a taxable event. The loan forgiveness would not be a taxable event.
Yeah, that was thanks, Dale. That was actually the question I was going to ask. A few questions on the tax status for the forgiveness had come in. Dale, you see the questions there. A number of questions that have come in here at the end, kind of specific stuff on what exactly counts towards payroll in terms of making the calculations. Got a question on custom hire employees. What are the specific definitions for what pay is for employees and getting to that 75% mark? Anything you can add there to address some of those issues?
One of the questions there that we kind of addressed that was unclear until a couple of days ago. Again, if a self-employed farm with no employees, how does the individual use 75% of the proceeds for payroll costs? That goes back to that new term that we had there, where you look actually back to the 2019 Schedule F and take the 50 seconds of that, and that's basically your calculation of payroll for the self-employed individual, looking at that self-employed income. Yeah, again, a little different there, but that's how that is calculated from that standpoint. Another question here, Bob, I'll let you address. Do you add employee W-2 wages to Schedule C net profit, or I guess we can say Schedule F net profit to arrive at average monthly payroll? I think we kind of addressed that, but you can get on that again.
Well, we would. That's sort of a hybrid application. They have payroll paid to other employees, and so that qualifies under that piece. They would also need to look at their net self-employment income that could be added to that. So if they had 20,000 of payroll paid outside employees and had a net farm income of 110,000, they would start their calculation at 100,000 plus 20, $120,000, and their loan amount would be around 24 to 25,000.
Another question here, Bob. Thoughts on whether rent can be only on real estate or whether items like equipment rent could count?
I think that's been something we've been looking for some guidance about, but we really just described rents. There's also been a similar question about interest. Can interest on real estate only qualify, or can it be on personal property? It sure seems like as long as it's mortgage interest, it can be interest on either of those categories. Rent, I think one of the examples, if I'm remembering, in that even talked about rent on a personal vehicle, on your business vehicle would qualify as rent. I'm going to look for that piece at the moment to see if I'm remembering that right. But rent is just a broad stroke. We know farms pay rent for land and other things. I think rent could be qualifying. I'm trying to see here it says business rent payments. This is in the April 14th guidance. Business rent payments, for example, the warehouse where you store your business equipment or the vehicle you use to perform your business. So I think they're describing both real estate and personal property rents as valid rent amounts.
Bob, thank you so much. Bob Ray is with FBFM. He joined us here on this FarmDoc Daily Live Coronavirus and Ag webinar. Thanks also go to Dale Lattz and Nick Paulson, both with Department of ACE in the College of Agricultural, Consumer, and Environmental Sciences, and members of the FarmDoc Daily team. We thank you as well for staying with us and listening to this webinar. Again, you can find it online and listen to it again at farmdocdaily.illinois.edu. Just look for the Coronavirus and Ag tab and go ahead and punch in on that, and you'll find all of the details of this particular webinar, including the slides that you can download if you'd like again, and other webinars as well. On behalf of the FarmDoc Daily team and Jim Baltz, who is our technical director, I'm Illinois Extension's Todd Gleason.